Thanks so much, Dave. We have a fantastic presentation here today. Power Pack, this is such an amazing subject, trading shock events, that it sets up either as new opportunity, I'm going to show you, or it's going to perfect subsequent setups that are more probable and high probability after this shock event. And finally, it is important to learn this information because if you're an active trader, like most of us are, you're gonna get caught in one of these. It's just a fact, particularly if you hold overnight with no ability to hedge. You're gonna have gaps that go against you. Now I'll show you our approach. There's many ways to skin the cat in the financial markets. Ours is a techno-fundamental approach. Some people are going to try to sell you the subjective oscillator salesman type, and this is just it's a big mess. I can't even make sense out of this. I need you to remove all this stuff so I can read objective price action. This is our technical approach. Start with a compelling pattern. I say no setup, no action. Then I start with that compelling setup, and then we overlay our other concepts. We say, okay, well, where is this pattern in connection with the overall trend, support and resistance? What are multiple time frames telling us about the probability of that? Volume is secondary and moving average analysis, but we use those to give us more information and to speed up the analysis that we can make just on the price patterns alone. What are the broader markets doing? We had an ugly, nasty gap down today, and so that was a shock event in the broader markets. So how I trade longs or shorts on a compelling pattern is going to be very different today than it could have been last week. And then our market internals give us great heads up at turning points for swing trading, and we use different market internals for turning spots on intraday. Without proper position money management, trader psychology, you're destined to fail. I hate to be blunt like that, but the success of trading is having a systematic, objective method of interpretation, which our approach obviously does. And then you need the discipline and patience to follow your trading plan, your rules. So you need to start with objective education. Then you need the seasoning to get to that unconscious competence level. And that should be the goal of all traders. I mean, I'm a private pilot. I only got like 300 hours. And so my professional friends with 40,000 hours, run circles around me, and that's the difference in the seasoning. Every one of these little 9 pictures here are bullish trade setups. So on that last slide, this is the starting point. Okay, I have a bullish setup. We purposely don't show you anything else on this slide. You don't know what time frame it is. You don't know what instrument it is. It could be Apple. It could be cryptocurrency. Our technical approach applies the same to anything that moves. So today we're talking about shock patterns. And you might say, okay, well, are any of these shock patterns? And if so, tell me how to make money. Well, they're, in a sense, they are all turns. They're different pictures of turns. So yes, every one of these have different levels of shock. Now, this one, a pullback, a buy setup, retracement in an uptrend, I'm expecting it to take out a prior bar's high. It took out a red bar, so yeah, that's a small shock. The ones that I can point here that I would say are the biggest shock value that we're going to cover in great detail is these, if it's a 2-bar turn like this, we call it a bull 180, ugly red bar suggesting lower prices, immediately followed by a bullish green bar negating that. Now, just because you have a shock pattern, that's not a tradable event. either is this. So I need to overlay those other concepts of tradable void. Breakdown failures, we love the gaps. So this is the same as this, but it's a 3-bar reversal instead of 2. W bottoms, particularly when they take out a prior low, because this wasn't a downtrend, and the bears are expecting new lows, and then it reverses, and that's the shock element of that. Different flavors of these, like we call it an event. Hey, this jumps out at you, something of the supply demand relationship is shocking the market participants. So how do I make money off of that? We have different kinds of them. I'm going to go over as many as I can in the allotted time here. Igniting gaps, gap reversals, igniting bars. This is the up and downside shakeouts. So I spoke about a couple of these already. That is not a tradable event. I have to overlay everything else and see if I have something. So this was Apple a week or so ago, 15-minute chart, went up. So what's the glaring shock that we could talk about here? Well, this one's just right in my face here. This was a nasty 2-bar breakdown. There's my 180 reversal. Now I have a 4-bar reversal that's consolidating at resistance. So this provided a beautiful late day breakout as an inverse head and shoulder as a day trader. This was in a downtrend. This is a 20-period moving average. And so, you could trade with the trend, and then it turned into be a bottoming pattern. Little red bar ignored, late day breakout right there. This was some ETF we gave, and this is one of our flavors of shock patterns called a breakout failure. So this ETF is up a lot. It's in a power up trend in this couple of week period. Had a closing breakout from a couple of bar consolidation. 100% expectations are for this to go higher. It then gaps under the green bar, goes sideways, lower high, lower low, another closing breakdown. That's where we would be all over this. Here's a retest, what we now call a sell setup. This is a closed trade, the format. All of our trades, open and closed, are maintained for members in the members area. And we give the stock or option trade, the symbol, always the technical setup. We're here to teach you along the way. So this was a bearish gap under a wide range bar after a climactic sell setup. And then we give trade management along the way. So we were in this in our ETF trader 37 days. Entered here, we got out of half here on this big gap down. Other half here. Different flavors. This is a W retest pattern. We do every Wednesday. My partner Greg Capper and I do a 1-hour education on YouTube. Today's session was on price voids. This is a beautiful example of a price void. Multiple fluid bars down leave little overlapping bars, congestion to make, once we get a bullish turn, it has an easier way to go back up. So we're just watching for our turn. And right here, it had a bearish gap down, no tail, in a range expansion engulfing bar. Now, could we buy over the high of that bar, stop low? Yes, nothing wrong with that at all. Then it came in, I have another 180 reversal. I have a bull 1, 2, 3 continuation at the 50 period. So this is a beautiful retest pattern with a price void. And that's what trading is. You have to obviously have the knowledge to know how to recognize a high probability setup. And then you have to be able to execute on that with proper position management. So we trade stocks and options. We have a technical based approach to trading anything that moves. So we need a bias on the underlying before we trade options. We buy liquid options and then we also sell liquid options. When we sell them, that's what we call an income trade, where we're merely wanting to find a compelling turn, bullish turn or bearish turn. And then we go through our checklist, option selling checklist, and make sure they're liquid, see what strike under support, how many days to expiration, and we sell that. So in this particular case, shorted a put spread, take in the money, one contract represents 100 shares, manage in between. This one, big mess. Look at all these flat moving averages here. This is, I have no interest in this, but let me tell you where I started my interest. Right here. This red bar closing below all these moving averages, closing breakdown, totally suggested lower prices. Gap down the next day, deep retracement. So I'm not doing anything. I'm explaining many times it takes a while for these to set up where we're ready to strike. And what I mean strike is enter the trade. I now have my confidence. So this is bullish consolidation at resistance, slopping around still. Now I have a closing breakout. I have an inside bar. This is what we call a master trader 1, 2, 3 continuation breakout with from consolidation, another closed trade here. And we had a beautiful 10-day run. And even though, I labeled it as a core long, which to us means we expect to hold this weeks or months, because the bigger time frame also has a big price void. But look, we made 29 points in 10 days. We just took it and then we said we'll look for a new setup there. But this beautiful pattern started from this shock pattern here, and bullish price action, red bars ignored, etc. Couple shock patterns here. So consolidation, deep retracement. See, I'm not hitting the button at all here. I mean, this would have been a bullish 1, 2, 3 continuation. So that actually was buyable, but it didn't trigger, never entered. This is what we call an igniting gap. This is a power uptrend. This is bullish price action, gapped up, range expansion, engulfing bar. That is the shock pattern to the bulls who had been holding in this the whole way up. Now, so if you were in the trade, that is danger, danger, Will Robinson, get the heck out, take your money. Once it closed like this, it's a new opportunity to short, because that's a breakout failure from a climactic sell setup. And today's subject again on MT Live at noon, the price void. So this momentum move up leaves a little support on the way back down. Bearish consolidation, another little shock there. Price void, we'd be shorting the heck out of this in our green trading room, sending out Telegram alerts to our subscribers as new trades. What's my shock here? Beautiful breakout, beautiful price action. There would have been no logical fear of not holding this overnight. Here's my shock. Closing breakdown under 3-4 weeks of consolidation, followed by another shock. Gaps just over this consolidation. Notice there's no bottoming tail. So the bulls stepped right up. We'd be buying this as a new trade, 5-minute high. Price void, look to the left, there's no resistance. to halt a beautiful move up. Another closing trade here. So this is daily chart and this is weekly chart. So remember I said our path 1, 2, 3 continuation breakout. Again, just I've showed you one or two of them already. But what makes this even higher probability setup, this was a 180 breakdown failure. Then it gapped up and went sideways. This red bar suggested lower prices. There's my 180 reversal. Here's my price void. Now I get a 1, 2, 3. Another concept of ours is multiple time frame alignment. They are, you know, they're rarely will they be the same pattern, but very simply, we go up one time frame, so from the daily to the weekly, and you don't want to fight the bias of the weekly. So I want it to be bullish, and it is. This is a buy setup after a breakout. So that supported this beautiful 1, 2, 3 after two little shock patterns. Now, Greg and I have been working together 25 years. He's like a pioneer in technical analysis, and we love teaching. It keeps us more active, more sharp. We love giving back to the community. We love watching people grow. I mean, we have thousands and thousands of amazing testimonials. You know, here we have this live trading room where, and you know, I'm glad people are coming to events like this to learn from different speakers, and we show you these beautiful PowerPoints. Come take out an entire week. Come spend with us in our live trading room. $7, mastertrader.com, green trial, and you will watch us implement our technical strategy in real time. You know, many people rightfully can say, oh, well, Dan, yeah, look, yeah, it's easy to put an arrow on here and say I would have bought here and I would have done this. Well, you're right. We're doing it together. And these are all posted. So this is an igniting breakout following a 180 reversal with my 20 and 50 curling up. That was a beautiful new entry. This red bar suggested lower prices, has a price void, and we say there's no follow through to that, to the message of this red bar. It didn't go lower. So that in and of itself is giving us valuable information. Here's another one. Price void. This suggested lower prices. It gapped up and went sideways. So here is my continuation breakout from this igniting breakout. A couple more gotchas here. So here was just another breakout failure, you know, there. And then here is a breakdown failure on the downside. So would I have bought over the high of this bar right here? The answer is no, I wouldn't have. Why? Because look to the left, the concept of the void again. But now you have my attention on the gap up following the 180 reversal with this big price void. So now I'm looking to get on board long. This is just a consolidation, two red bars ignored, you know, great little continuation pattern. So here's one where we bought a bull called debit spread. You know, the benefits of buying options is leverage and limited risk if it goes against you. Many times we'll just buy the outright call, and sometimes we'll do a debit spread to lower our cost basis. And what's my shock on this? It's pretty darn obvious, isn't it? 5-minute spiders now for day trading. We love buying for day trading. We love buying calls on the liquid ETFs and index ETFs because the same benefits, leverage and limited risk. So what was our pattern here? Well, this was some type of breakdown on news. And this little dotted prices are showing you the prices of these 261 spider call prices. And breakdown 180 reversal on whatever intraday news. We bought over the high, these call options, late day breakout, just afternoon trade, 40% return. I mean, I could spend hours and hours showing you examples. So I again, we only have 9 minutes left together. I'm just going to show you as many as I can. Powerful move. It's consolidating. This suggested lower prices, came right back up, consolidating at resistance, bullish and engulfing, closing breakout, no brainer. Bought the stock, another 5-day swing trade. That one we looked at. So this is a downtrend. I have 20, 50, 200 period moving average, all down. Ugly red bar far from the 20. That would be a place to take profits on your short. And I'm looking for a new setup. Well, it negated that, so that's a sign of strength. Went sideways, broke out. What did it do next? Now, would I buy that as a counter trend trade? No, because I'm fighting. I don't have a quality pattern, and I'm fighting the downtrend. Now you have my attention. I have this, we have this term we made up. Two big red bars that engulf a green bar. We call that a bull sandwich. It's a continuation pattern lower, and the same on the opposite side. Now I have another wide range bar, closing breakdown. I have a bear 1, 2, 3. All of this becomes resistance. This is my big price void. We bought puts on this one, 34.5 in the money puts, and made 60% return on a 6-day swing trade. This one, I remember this was earnings, and it gapped down on earnings. It's in a nasty downtrend, and many times we are watching in advance to see if a potential failure shock pattern sets up exactly as I'm sharing with you today. So when this gap down in our live trading room, because it's down so much, look, this thing already fell from 1,660, it's cut in half. Could it have continued lower? Of course it could. Of course. But what I did, I set an up alarm based on the intraday chart. I'm like, hey, let's just see if this stock can negate the gap down. Sure enough, my alarm went off, closing strong. It's a gap reversal shock pattern. We bought the stock, had a beautiful little swing trade, just a bounce from a bottoming pattern. This is similar to that other one. We say same but different. We have the tools to trade anything you throw at me. I can trade, but I'm waiting for my technical setup that I recognize a high probability pattern. It's similar to a professional poker player who understands the odds, understands the cards, knows what cards he's dealt, knows when to double down, knows when to pass, fold. And my entry was under this green bar after this upside shakeout in a downtrend. So that's the seasoning part, folks, where you see something and you say, that's a no-brainer. It's a no-brainer. So I got 3 inside bars here of this ugly red bar. That's what we call a 1, 2, 3 continuation. third target was maxed, next third target met, went into trail mode for the rest. W bottoms and tops. That's the final one I'm going to cover with you here in the next couple of minutes. These we love. And these are just different. Let's start with the bullish side ones. These are very simply 3 different variations of how they could set up. I mean, there's so many different examples. You can't ever get hung up on, well, that's not exactly what you just showed me on that page. It's the same message. Momentum move down. Counter trend retracement, less than a third into this void. And then I'm looking for some flavor of a turn. Now, could this continue lower? Of course it can. It's in a downtrend. But if it's down a lot, if there's major support to the left, if the bigger time frames are also down a lot, we are looking for this. NL means new low plus. It made a new low and snapped right back with a 180. Here's a different flavor of retest. Here's a different flavor of retest. This is tan. This is a fairly current chart. You know, there's a couple more bars over here, but this is a potential massive W bottom on the weekly chart. Now, the monthly is bearish in a downtrend. This is still in a downtrend. This is counter trend once we get our turn. We don't have the turn yet. Now, this could continue sideways and break down, in which case it is a consolidation in a downtrend. But then our W bottom reversal never triggered. Now the true trigger on this one is over this prior high. More aggressive would be just buying over the red bar. As a red bar ignored, got a price void. I got a small price void to this, and then I got a monster price void all the way to this breakdown area at $70. Momentum moved down, up a little bit, and same here. This under this green bar could have continued lower. So you gotta understand where you have the confidence of a potent turn. My confidence of a potent turn was after this green bar finished the day, because now I have a 1, 2, 3, 4, 5 bar turn. 5 bar turn, retest, price void. I'm ready to go. Here, red bar ignored, 1, 2, 3, price void. That's a continuation pattern. One more here, wing. We just closed this out yesterday, I think. So this is a beautiful M top on the weekly. The daily was a breakout failure. It made a new high, got rejected, bearish engulfing bar. Sent this to our subscribers, sell the out of the money call spread, 390, 400 for $1.15. We closed half, 55 cents, and we got filled yesterday at 15 cents, or 20 cents rather. It says here, take the money. Shock pattern, multiple time frames, exactly what I'm showing you here today, folks. We put together this special for you. Go to mastertrader.com/May deal. It's 60% off Greg's amazing swing trading course, and we have all these goodies to throw in addition to that. 1 month of the advisory swing letter. We give you our scans, Greg's scans on TC2000. We give them to you. Lifetime coaching. Here's the Master and Credit Spread course. Any questions, email me, Dan@mastertrader.com. It was my pleasure. Hope you enjoyed it and enjoy the rest of the program here today.